community, they come together and form organizations like just to support the cultures, its sports activities, art by forming a art gallery where they promote mm, or encourage the artist to have their artwork and they do the exhibition, sell the art of that so that they can encourage people to participate in those activities. Separate existence. What does it mean? These organizations have separate existence from its member. Like for example, the life of NPO is unaffected by the life of its member, non-profit organization. Yeah, they are the trustees, they are the member who formed it, but they are not, they are for the organizations, but not the earner or the owner of the organizations. They are, it's created as a separate in sole trader. Sole proprietor is the owner of the business and he is entitled to use all the profit of the business. But here in partnership, the partners are the owner of the business and they also share the profit. But here is not like that. The members are the, like in simple language, if we say, they are just the facilitator, operator of the organization, but they are not are there as a owner of the organization. So organizations established as a separate entity from its member. Is that point clear? What is the form of non-profit organization? Separate entity or separate existence. Is that point clear? Yes.
Yes, ma'am.
Okay. Now, what is the aim to having not-for-profit organization? The purpose is to further culture, educational, religious, professional, or public service objects. Yeah, either they wanted to provide the culture activities, opportunities, educational centers, religious activities so that they can spread the importance and the concept of the culture to the society and also for public service like serve to the society. Do you know any example of non-profit making organization for educational purpose in Botswana? Non-profit making organization for educational purposes here. Do you know for religious? Religious, like for Christianity, they have church, right? For Muslims, they have mosque. So it's also they establish with the name, a specific name, so and so church, like 7 Days Ventures Church, Mosque, Islamic Mosque. So they are established as a non-profit making organization. Hindu society, it is also a non-profit making organization, right? Form. It is set up as a charitable society, or as a trust. So, not profit motive. Its aim is not to earn profit. However, the organization is capable of earning profit. Yeah, but they don't, maybe they are having some surplus balance, they're getting more than whatever their expenditures, but still their aim is not to earn profit. The organization is capable of earning profit. Any surplus is used by the organization for its prescribed objective rather than distributing it among the members. Yeah, if they save some money, they use for future activities, but members does not get any benefit, any financial benefit from the trust or society. Management. It is managed by a group of individuals known as trustees or managing committee. So those are the trustees, society member, they are the one who manage and run the activities, whatever they're supposed to serve. Funding. The main source of their income is subscription, donations, government grants, and other receipts. I hope this point is clear. What is the subscription? The monthly fees. Like if you join a sports club, you have to pay a certain amount as a membership fee, maybe 200 pula, 300 pula. So that is known as subscription fee. Some people also donate. Government also gives some money as a grant just to encourage those activities within the country. Accounts. Unlike profit-seeking organizations, non-profit making organizations do not prepare the profit and loss account. This is important for you to know. They do not prepare profit and loss account to show a summary of the revenue income and the revenue expenses. The non-profit organizations prepare final account every year, which comprises of receipt and the payment account, or income and expenditure account and the balance sheet. Is that point clear?
Yes, ma'am.
Yes, ma'am.
Yeah, so we do not prepare a normal profit and loss account or income statement. It's need to require the receipt and payment account, income statement, and the expenditure account. Now, what is the difference between the non-profit organizations with the profit-making organization? The main difference is in the aim. Not-for-profit making organizations, their purpose, their aim to serve the society by providing certain activities, but profit earning organizations or firms, their purpose is to earn maximum profit by providing certain activities. They also provide activities, but their profit is to earn profit. The main aim is to earn profit. Like if it's a sports club, they just want to provide the sports facilities so that people can develop their sports skills. But a hotel is a profit-making organization. They also provide service, food, a staying facility, but with the aim of earn profit. Formation and management. NPO is formed by promoters and managed by the trustees or the member of society. But the profit earning organization, they are formed by entrepreneurs and the managed by the owner or the manager of the business. Yeah, it's not necessarily every time it is managed by the owner. Sometimes it is managed by the managers. Funds, it raised fund by way of membership fee, donation, surplus from the operations, which are shown in the books of account. But for profit earning organization, it received fund from the proprietor, partners in the partnership, and limited capital from the shareholders in the limited companies form. Is it clear?
Yes, ma'am.
Okay, I'm explaining how much I think to explain for each point. And if I'm moving, you do not understand, please stop me and ask to repeat or explain more. Financial statement. Final accounts are prepared every year in both type, non-profit making, profit making, they both prepare every year. That comprises of receipt and payment account, income and expenditure account, and they also prepare the balance sheet, or which is nowadays called the statement of financial position. And for the profit making, we know that they prepared the income statement as a trading and profit and loss account, and also the statement of financial position. The surplus or the profit, the excess of income or receipt over the expenditure in the income and expenditure account uh, is termed as surplus, or you can call it profit. And in profit making organization, the excess of credit side over the debit side of the profit and loss account is termed as net profit. Yeah, because we take the figure from trial balance from credit side and debit side. That's why it's saying the excess of credit side over debit side is treated as net profit. Okay, so basically, what kind of financial statement we prepare for not-for-profit organizations? So they are in three forms: uh, receipt and payment account, income and expenditure account, and also the statement of financial position. So income and receipt account to find out how much surplus they saved in the society or in the trust, and then with that, we prepare the income and expenditure account and also the statement of financial position. Okay, now you need to understand what is the receipt and the payment account. The first one, it is the account that shows the summary of all cash and bank transactions occurred during the accounting period. Yeah, how much cash we received through the summary of total received as a cash and bank transaction, because nowadays people also transfer the money through their bank to the society or trust. Yeah, for the during an accounting period, it starts with the opening balance of cash in bank and ends with the closing balance of cash in bank. This is a real account like the basis of the preparation of income and expenditure account and also the statement of financial position. I think the features are not really important. By its name, you can understand the receipt and payment account means one side you are recording all the amount which is received by the business, and one side you are recording all the expenditures which is done by the non-profit making organization. Are we together? And
Yes.
obviously the period is for one accounting period. So one accounting period is known as 12 months period, right? So they also prepare for 12 months period. So here you can see a format of, okay, just one thing, adjustments like in the financial statement for profit-making organizations, we do the adjustments, but here the adjustments are not required. Adjustments for accrued outstanding item and depreciation is not required to made in this account. And the purpose of preparing this account is to show amount received and paid under various heads during the accounting year, and also to know the cash position of the trust and also the entity. So here we have a receipt and payment account format with maximum entries. The entries we can expect. So the debit side is to record all the amount the business receiving from the various activities, organization receiving. So we start with the balance which is come from the last year, opening balance. If you have the surplus balance, like you receive 50,000 and during the year you spent 45,000, so you are left with 5,000. So 5,000 is the opening balance which is come this side, the receipt side. Are we together? The balance which is remain in the business as a cash or also in the bank, if because sometimes that they also have the remaining money in the bank. So this is balance at the cash and also at the bank. But sometimes their receipts are less than their payment. They spend more money because they buy some equipments, they repair the building of the trust or of the organization. So their money is finished and they overdrawn from the bank. So if they have overdrawn balance, we write in a credit side the opening balance in credit side as a bank overdraft. Are we together? Sometimes they have overdrawn balance instead of surplus balance. Is that point clear to everyone?
Yes, ma'am.
Okay. Okay. Then after having the opening balance, surplus in a receipt side, overdrawn in a payment side, then this year how much money they receive, like from the subscription fees. Some people they paid delayed, they're supposed to pay last year, or like they have to pay the subscription fees for November, December, but they didn't pay. They pay in January or in February. So you maybe have some subscription fees from the previous year, current year. Some people they paid in advance, like they know that, oh, there's a 3 months installment policy. So it's November, December, and January. So for 1 month, they pay in advance for the next year. So you have to classify how much subscription fees you receive from the previous year, current year, and also for the next year. Then after subscription fees, the general donation, some people they give donate money for the development of activities, like if it is a football club, people donate money for better field, to develop a better field, buying the footballs, net, etc. So how much donation they receive, we write. Entrance, admission fees. Sometimes they organize an activity, and for activities they put charge some entrance fees, maybe a small amount. So how much they get as entrance fees, general grants. Grants sometimes come as a government support. The government provide the sponsorship, and that is called, even some private big business, Giant, they also provide grants. So it comes is also a kind of donation. General grants, sale of newspaper. Sometimes they also do some other activity to raise fund, um, selling some product, newspaper or drinks on the mall just to raise fund. So if they raise fund by selling anything, if they are selling the scrap or something, getting some cash for that old furniture they are selling and get some cash amount for it, we write under the receipt for the year. Interest on investment, sometimes if they have huge saving, they invest somewhere to earn interest. So if they're getting interest, it is also a source of receipt. Income from concerts and lectures. Yeah, like sometimes it's a trust hospital, the doctors are going for guest lecture and get some money. So the money is also denoted to the non-profit organizations, dividend, rent received, interest received, miscellaneous. Apart from that, if there is any other income that is fall under miscellaneous receipt, life membership fees, subscription for a specific purpose, donation. Yeah, these are some maybe come, some maybe not come. Okay, now the payment, they make the payment to the members. Mm, Apart from the trustees and the member, there are some employees who help to run the organizations, so they pay the salary of those workers. If it is running in a rental building, the rent, postage expenses, newspaper, if they are selling newspaper, magazines, they have to buy. So how much they pay to buy them, repair charges, the audit company also come to audit their account, so they have to pay audit fees, maintenance expenses, insurance, secretaries, honorarium, uh, municipal tax, because they also connect with the water facilities, electricity, so those are fall under municipal tax. Prize distribution, because end of the activity they also give prize medals to the participant, so they need to buy those medals, trophy and other gifts. So whatever they are buying for prize distribution is an expense, they pay for it. Office expenses, expense on show, if they are conducting any concert, they are showing musical or something for fundraising, so how much money they spend on it. Then some other payment as a miscellaneous payment, purchase of fixed asset, if they are buying more furniture, sports equipment, so they are paying money for it, books, loan, building, etc. So from the receipt, we subtract the payments. Suppose if your receipt is 60,000 and the payment is 50,000. So the club or the trust, they manage to save the 10,000. So 10,000 we write in a credit side as a closing balance. 10,000 remain as a cash in hand. But if in a particular year your income receipts are less than your payment, in that situation you have a overdrawn balance again. Some some trusts, some churches are there. They spend more money because they conduct many activities and they do not have much source of income, so they go on overdrawn balance. So if it is your payments are more than your receipt, then you will have a balance, bank overdrawn balance, which is in debit side. So if the receipt side is more than the payment, you will have the credit side balance, which is this side. But if your payments is more than the receipt, then you have overdrawn balance, right? Okay. Now, what is the limitations of receipt and payment amount? It follows cash basis of accounting. Mostly they have cash basis because some non-profit organizations do not have the bank account, so does not show any income and expenses on the accrual basis. It is not capable showing whether the non-profit organization is able to meet its day-to-day expense out of the income or not, as the credit transactions are ignored. It is not a perfect substitute of trial balance as the account fails to reveal the closing balance of all the accounts. Uh, I think we don't need to go for difference between this, that. I'll post this document so some of the information you can read from yourself. Are we together? So do you understand the receipt and payment account? I think it's very simple. You just list them, the receipts and the payment for non-profit making organizations, and then find out the balance. Are we? Are we?
Yes, ma'am.
Anybody who find it? Anyone? Before we move on the income and expenditure account? None. Good. Very good. All right. So the second account we prepare for NPOs is income and expenditure account. So what is the meaning of income and expenditure account? How it is different from receipt and payments account? It is like a profit and loss account of an entity or the business where we are saying like how much income they have. It shows all the revenue income earned and the revenue expenses incurred during the accounting period. Yeah, like you will see the format. It is prepared at the end of accounting period on accrual basis of accounting. Yeah, under the receipt and payment account, we do not record any accruals. The outstanding sometimes maybe they buy footballs or they buy basketball, but not the amount is paid. So those unpaid amount we do not show under the receipt and payment account, but it has to be accounted in the income and expenditure account because it is prepared at the end of accounting period on accrual basis accounting, where we are considering the outstanding payments and income. It determines the result of organization operations, whether it has surplus or deficit balance. It has two sides, normally called debit side and the credit side. All the incomes and gains are recorded on a credit side, and all the expenses and the losses are recorded in a debit side. Access of credit side over the debit side in terms of surplus, whereas exceed of debit side over the credit side is termed as deficit. We do not use the word net profit or net loss because this is not a profit-making organization. So that's why it is called surplus or deficit balance. Such surplus and deficit balance, as the case may be, either so let's see the format. Okay, basis of recording. It is follows the accrual basis of our accounting to ascertain surplus and deficit arising after meeting all revenue expenses against all revenue incomes at the end of the accounting period. All right. It has no opening balance. However, balance at the end of is either surplus and deficit, which is then transferred to capital fund account in the balance sheet. So there's no opening and closing balance like in receipt and payment account. We make certain adjustments based on the accrual, expenses, accrual, incomes, and etc. So this is the format of income and expenditure account. And for NPOs, can you see it? The one side, we record all the income, and in debit side, we record all the expenditures. So they have the income from subscription fees. If there is any outstanding, some people, the accounting year is ending, some people haven't yet paid. So we also add outstanding fee. If someone paid in advance in the beginning, I think that one we deduct, and then less outstanding at the beginning, then less advance at the end. You add all of them, then you subtract these two, because advance means it is for the next year, so it should not be included in this year. Then if they have any other income like having the entrance fees, receive donation by sales of newspaper, hall, they might be have a hall they giving to other organizations for rent to conduct some activities, they receive some rent on it, so that rent is an income. Sundry receipts, deficit in case if your expenditures are more than the incomes. Then the various items of expenditures like salary of employees. If there is any outstanding salary, we add. If any amount paid in advance, we subtract the paid in advance from that year account. It is written outstanding at the beginning, but this is called paid in advance. Then if you pay any rent expenditure, insurance premium paid, if any amount paid prepaid for the insurance premium, we subtract prepaid as we do in the income statement. Payment of audit fees, payment for printing and stationaries because they maintain the record. They also print the admission forms, various documents. So all those expenditures will come here, printing and stationery charges. If they conduct any event, honorarium, telephone charges, repair, depreciation, sports material used. So if your income is more than your expenditure, you will get a surplus balance, exceed of income over expenditure. But if your expenditures are more than your income, you will get a deficit balance. We do not write as a profit or loss. We just state as a surplus balance and the deficit balance. So do you understand the income and expenditure account? Mm-hmm. Anyone?
Yes, ma'am.
Yes,
Okay. So expenditure side to record all revenue expenses for the current period, okay? And in income side, we record all the revenue income for the current year. Like if you are preparing for 2022, we only record for the transactions which is happened in 2022. And the capital expenditures, do you still remember the difference between revenue expenses and the capital expenses? We covered the revenue expenses and capital expenses in ACC 100. Do you still remember?
No, ma'am.
Okay. The let's start with revenue. Revenue means income. So those expenditures which is incurred in the business to earn profit, like you earn the profit when you are operating your business. So operating related expenses like paying salary, paying wages, paying for repair and charges, bed debts, all those kind of expenditures are known as revenue expenditure. And the capital expenditure are the expenditures who increase the capital in the business by acquiring the asset or increasing the value of asset. Means when they are spending money for the investment, buying more non-current asset, buying land, or adding the value to the current asset. Like suppose there is a building already have, now they are is not repairing, they are maybe adding another room to that building. So you are adding to the value of existing uh, asset. So when they are spending money to buying more asset or adding the value to asset, it is known as capital expenditure. And the revenue is for all the activities which is incurred for day-to-day running. Its result, so capital expenditure which benefit the organizations for more than one accounting period. Just a minute. And its result in acquisition of asset which is used for furnish of activities carried on by the non-profit organization. So like sometimes they also buy land, building, more furniture, more equipment. So when they are spending the money on it, like furnitures, non-current asset, it is known as capital expenditure. But if they are buying just some equipment which is they are using day to day, it is not considered under capital expenditure. That is revenue expenditure. And the revenue expenditure, it is the expenditure the benefit of which expire within the accounting period. Like for example, buying the material which is used during the year, the rent, insurance, salary, other payments are those. Okay. Now here is the difference between the capital and expenditure account and profit and loss account. Uh, Obviously, the aim objective is different. The aim of income and expenditure account is to find out the surplus and deficit balance, but the aim of making the income statement or profit and loss account is to determine the profit and loss of the business. Income and expenditure accounts are prepared by non-profit making organizations. Profit and loss account prepared by the profit entities or profit enterprises. The method of if any organization maintain a complete set of books, this account is prepared from the trial balance. No, what is that? If the organization maintain a complete set of books, this account is prepared from trial balance. If complete set of books are not maintained, it is prepared from the receipt and payment account. Yeah. But obviously in profit making organization, uh, the account income statement or profit and loss account is always prepared from the trial balance. You remember in each question we give the trial balance, you use those balances to prepare the income statement. And the balance sheet and the balance in the account in terms as either surplus and deficit, but for profit making, there it always shows as a net profit or net loss. It's just common. Okay, now you need to understand the balance sheet, the last document for NPOs. What is the balance sheet? It is the statement that reveals the financial position of the organization at a particular date. It shows the value of assets, liabilities, and capital fund. It is prepared in the same manner as for the other type of business forms, and it is prepared after the income and expenditures account has been prepared. Any surplus and deficit in the income and expenditure account has transferred to capital fund account where okay. Capital fund, total assets minus total liability. Opening balance sheet. It shows the balance of all assets and liabilities, fund and reserves at the beginning of the accounting period. I think let me show you the format so you can understand better. Then we can read this. Yeah, here you can see the format of a balance sheet of not-for-profit making organization, right? The balance sheet. Can you see one side we are stating the asset and one side we are stating the liabilities. Can you see that in asset side we have start with non-current asset, building, operating balance, then we add if they buy any more building, any addition, then we subtract depreciation, another asset like furniture, how much the cost of furniture, if there is any addition, more furniture has been bought, we add the value of it and subtract the depreciation. Then we list the current assets, cash in hand, cash at bank, subscription in error, accrual interest. Then if there is any investments, so investment is also treated as an asset. Investment other than their own properties. Then the liability side, we write the opening balance of capital, then we add surplus, building fund, opening balance. If there is any donation on the building, income from the building fund investment, sports fund, donation fund, opening balance, income from sports fund activities. Then we state the liabilities, rent, salary, anything outstanding, then subscription received in advance. So it is also liability to serve for it. So after adding all these things, the total of liability side should be equal to the total of the asset side. So that's how we prepare all these three accounts under non-profit making organization. They have given so many examples here, but it's not necessarily when we are doing the class activity, we are going to include all of them. It's depend on what type of non-profit making organizations we are taking as an example. Are we together? So do you understand what is the non-profit making organization and how to do what kind of accounts we prepare under non-profit making organization? Hello, are you there?
Yes.
Yes, ma'am.
How do you find it? The new topic.
Less complicated.
It's complicated.
No, it's not.
Yeah, it's not. It's less complicated. Yes. Yeah, so I think it's good to also know that okay how the other organizations prepare their accounts, right? So we are ending our lesson here. Please, no, today is Thursday. Yeah, today is also we have the tutorial. If you do not attend the tutorial yesterday, please do so.